It changed pretty quick. I mean, you had weakness just based off the expectations of a Fed rate hike that's coming in September. I think it's almost a guarantee that we're going to see it in a few weeks here, and then another hike in December as well. But it changed late last week with the news that Chinese delegation was coming for trade talks here in the U.S.
Why?
Kind of took risk back on in commodities. China's the largest consumer of, and the United States, of commodities. Across the board, they traded higher. That's had a little bit of a crack in the dollar and caused gold to trade higher. And then Friday, you had the Commitment of Traders report. The Commitment of Traders report showed a record short position by speculators of gold. That's totally flipped as of recent, and that'll be something to keep an eye on. And I think what you saw is with the news out of China, with the trade delegation, the Commitment of Traders report being so heavy to the downside, to the shorts, that you saw a little bit of a flip over on some unwinding of those shorts, coupled with a glimmer of hope that there's something coming down the pipe here with the Chinese on the trade talk.
We may be digging a little deeper into the woods than a lot of viewers might anticipate. You think that really the issue has to come back ultimately to the relationship with the dollar and what the Fed does with interest rate hikes, correct?
Absolutely. I mean, this year it's going to be about the Fed. Gold, geopolitical flare-ups here or there that happen do drive gold up or down. But at the end of the day, with the environment we're in, it is all about the Fed and the fact that the Fed's going to raise rates. We'll learn more tomorrow when we get the Fed minutes from last month's meeting, where they're at. And then also you have Jerome Powell, Chairman Powell, speaking later this week from Jackson Hole.
Sure.
So there's going to be a lot of clues this week from the Fed on gold, but ultimately the Fed is what's going to drive gold this year.
Well, what do you think about President Trump's comments yesterday, just saying he doesn't appreciate the Fed raising rates, that he'd like to get their help during this time, their help with the economy? You think that has any impact on what the Fed ultimately does?
I don't think it has any impact on what the Fed does at all. I think the interview that he did with Reuters, the comments he had, it did, the dollar did slip a little bit, with led some strength in gold late yesterday and last night. But ultimately, I don't think the comments in that interview are going to have any impact on the Fed's monetary policy for
Bob,
the remainder of the year.
do you like gold?
I do like gold. I like after the Fed announcements to look to get long gold. But I think it's going to be hard for gold to sustain a rally this year with the Fed raising, probably doing it 2 more times this year, unless we get a change in some Fed speak. We had the Atlanta Fed chairman that did say he expects 1 rate hike this year. If we get more of that from the Fed, then yeah, gold will go higher this year. But unless there's a change, I don't see a real reason why gold is going to go substantially higher for the remainder of the year.
I don't know if we can call it a 10-year chart. We are approaching the 10-year anniversary of the financial crisis. And obviously, that was a time when people flocked to gold. They were so concerned about everything else they saw in the markets. Do you anticipate that level of interest in gold again? You can see it kind of peaked out in 2011. Are those days that are kind of gone unless you see a major market crash?
I think you need a major market crash, which is very possible. I mean, the S&P stocks being as high as they are, real estate being as overvalued as it is. I mean, did the Fed raising rates spark something in a real estate bubble? It's very possible. These bubbles seem to come and go. So I think it's going to take something like that, something substantial to gold to see a large rise over the next couple of years. I mean, I don't know what's going to happen in 2 years from a geopolitical standpoint, but it will take something of a bubble pop and some type of extreme market risk, I think, to see a rally in gold like we saw 10 years ago. I mean, 10 years ago was historic, and it's something none of us will forget in the markets. And I think right now we're not at that point in time. The economy is doing well. GDP data is trading higher. The only thing against gold, is the markets and also the Fed. So for the short term, for the next 6-7 months.